So what would I be doing? It's mid-November. What would I be doing if I was a business owner? Well, in fact, I am a business owner. But what are the kinds of things that I'm doing to close out the year? Well, the first thing I'd be doing for tax savings is I'd want to have an accurate profit and loss statement and an idea of how much cash I have in the bank. In particular, some might say a balance sheet. Without getting into the weeds, you need to have good numbers that tell you how your business is performing. So you might want to look at things like cost of goods sold. You might want to look at the current year profit because as we come into the fourth quarter, that's going to dictate what your final tax payment is going to be for estimated taxes as a self-employed person. That's right, that payment is due January 15th or thereabouts, 2026. So we want to be able to close out the year in the following 5 to 6 weeks, right? We want to understand when I say close out the year, I'm not talking from an accounting viewpoint, I'm talking about from a business ownership viewpoint. We want to take a look at cash coming in, cash going out, who do we owe, and who owes us. Now, what are some of the things that I'd be doing? I'd be looking to keep more of the money, more of the hard earned cash that's in the business on my side of the fence as a business owner. For example, I'd want to look at my retirement plan. Do I have one set up? How can I fund my retirement plan to make sure that I get the maximum benefits, whether it's a 401k, an SCP IRA, or whatever other version you may or may not have? There's still time to set those up. I would also be looking at equipment purchases. Is now the time to update equipment for my office, for my business? I was talking to a trades owner today, and they're upgrading some fleet vehicles. So they're going to be adding 2 vehicles. And as you know, with the one big beautiful bill or the latest tax law changes, we now are back to 100% bonus depreciation. And also our Section 179 number is much, much higher. What does that mean? When you buy a vehicle that's about $80,000, let's say, and you fit it out with the tools, you do the lettering to make sure it matches your company image and branding. If that vehicle ends up being $100, $200, $300,000, whatever the case may be, that is a deduction, right? And that deduction translates directly into 100% to the bottom line and therefore saves you taxes. So if you're a business owner and you're in the highest marginal bracket, plus you have payroll taxes and the like, and you throw in your state taxes, you could be saving in upwards of $40 or $50,000, or excuse me, 40 or 50% marginally on that dollar amount if it was $100,000. So I'd be looking at that. I'd be looking at my network. Are you going to be having company events, holiday parties, things of that nature? Thanksgiving's coming up. New Year's is coming up. Are there ways to do events that are team building for your group? Are there ways to look at bonuses for the employees? You want to take a look at your cash position because the larger the deductions that you have, and I don't want you to just spend money willy-nilly. Like I'm not out there just trying to spend money. What I'm doing is I'm taking a look at what we need, what our needs are into the first quarter of next year, the first 6 months of next year, and seeing what I can deploy. On the personal side, you might be looking at things like converting monies into a Roth IRA. Converting to the Roth, you're paying taxes in today's dollars. As you may know, we're in a very favorable tax position as far as the rates are concerned because they've been increased and or they've been extended so that we are locked in for a couple of years. Some may say pending whatever the midterm elections are next year, but we'll see. At least for now, for this year, we can guarantee ourselves looking at the rates. Also, are you an individual and you're looking at harvesting tax losses and gains against those losses? Oftentimes we'll get calls from clients who say, well, this stock is really high. And as you know, the stock market has been doing extremely well this year. You may want to unload some of your losses against some of the gains to harvest. That's what we call tax loss harvesting. But getting back to our business owners, that would be something that's happened on their personal side. What other things can we be doing? Well, we could be taking a look at, again, cost segregation. We have a client who has a new office that they're putting online this year. And that office has just been moved into and they're fitting it out. They have their cubicles. They have the other back to work, back to office kinds of things set up. And so in a cost segregation world, you would be able to maximize the depreciation. You might go from standard depreciation numbers of 39 years or 27 and a half years to a lesser period, say 7, 10, 12, 15 years, once you segregate the components of that piece of real estate. Same thing happens with our residential rental property owners. If they've put new properties online this year, we're looking to do cost segregation studies to maximize the depreciation deductions. A lot of folks also are selling property. Some of the real estate in some of the areas are at all-time highs, and people are looking to move into a more tax-friendly jurisdiction. For example, from New Jersey or New York to a place like Florida, or from California to a place like Texas. And if they're taking those investment properties, they might want to parlay those into a new investment property in that new jurisdiction. Well, that's where the 1031 exchange comes into play. So these are the kinds of conversations, and these are the things I'd be thinking about as a business owner, as a real estate investor. Now, obviously, I happen to be in a business where I'm very tax aware, but if you're not working with someone, that's a great opportunity. If I could just do a quick sidebar for the moment, a great opportunity is for someone like ourselves to talk to you on a basis where we could take a consult out, book a call, schedule out, and figure out what's going on with your business. Are you a plumber? Are you an electrician? Are you a small law firm? Are you a large law firm? What things can you do? Are you a retail business, restaurant, that type of thing? What can you do to reduce your tax bill this year? What can you do to reduce your tax bill this year? Because that, in fact, increases your cash flow. For example, if you can lower your tax bill and then therefore lower your fourth quarter estimated payment that's due January of next year, that would give you the opportunity perhaps to put money into your retirement plan, keep more money on your side of the fence. Are you looking at strategies? Do you have your children coming home? Are they college age? Are they high school age? Are they able to work in your business? Can they help you with your branding? Can they help you with your social media and things of that nature? Can you help you around the office? Can they help you decorate the office? Can they be there as servers for some of the holiday parties you may have for your friends and clients and all that? How do we capitalize and deduct all of those expenses so that we can parlay them into tax savings, thereby reducing your estimated payments, thereby increasing your cash flow? That's what this is all about for small business owners. You know, we're working with business owners who are startups, $500,000, $600,000, $700,000, all the way up to people who are making $20 and $30 million, particularly tech companies. We're working with them for R&D tax credits. There's a lot of opportunities if you're building out a new app, if you're building out new software, especially as of the advent of the more robust AI products that are out there. Are you setting up a data storage warehouse? Are you setting up cloud servers? Are these opportunities for you to deduct those expenses all in one shot? And if you're creating a new prototype or a new paradigm, either to be used internally in your business or even to deploy out to your customers, there's an opportunity perhaps for a research and development tax credit. Those tax credits, remember credits, tax credits of any kind are generally a dollar for dollar deduction or reduction of the tax bill. So for example, a deduction reduces your taxable income, then you calculate the tax bill. So for example, if you had a $100,000 profit and you had a $20,000 deduction, now you're paying taxes on $80,000, the $100,000 minus the $20,000. However, if you decided and we figured out that the bill on the $80,000 of income was $24,000, what a tax credit does is it takes that $24,000 liability and reduces it. So for example, if you had a $4,000 tax credit on that $24,000 tax bill, now all of a sudden the tax bill becomes $20,000. These are the kind of conversations I would be having with my trusted advisor if I were a business owner and we're sitting here sometime as we get into November, December timeframe. It's getting cold out. Are you able to capitalize on any travel? Are you able to set up any kind of calls with your team? Are you able to set up any kind of team building events to close out the year? Perhaps even have a sales event where you're creating your budget, your plan for 2026 and beyond, and you're meeting with your team members right now, maybe in a warmer client, maybe in your office, or maybe in a conference area or something to that effect, in a conference center, hotel, et cetera, to get your team motivated and ready to go and to have a plan going forward. Those are the kind of conversations I'd be having. So yeah, Tony Bruce, CPA, more than just an accountant, tax advisory for small businesses. And in particular, we'd love to set up an opportunity to jump on a call, go over your particular situation and see what we could do proactively instead of reactively. The worst conversation is to have one next February or March when you bring a bunch of data over to your accountant, traditional accountant, and say, should have, would have, could have done this. No, you want to be proactive. You want to plan now to reduce your tax bill 2025, 2026, and beyond. Again, reach out, like and subscribe. If you have a question, let us know. Put it in the comments there. We'd love to have an opportunity to talk and put your question here on the air with us. We're going to hopefully be getting back to doing more of these events. And, just curious, what's your favorite kind of holiday celebration? Is it all about the food? It's always about the family, maybe if even bigger, something special spiritually or religiously. And that's always an amazing event as well. So let's get together. Let's close out the year. Let's crush it. Let's make sure that we're minimizing your tax bill. Let's set up that free consult and go over things. Again, Tony Bruce, CPA, more than just an accountant. AFBCPA.com is the website. Take care and have a great day.